Welcome to Market Movers. I'm Dave Hightower, joined by Dan Bossie. Today, we're going to be talking about the September grain stocks report. I want to take a quick sideline here because we have what appears to be inflation potentially building into the marketplace. Been gone for decades. China caused inflation. Maybe they're going to cause inflation because of tariffs. So bring into these grain stocks reports. We know stocks are going up. But is demand going to go up?
Well, I think so, David. I think as we look at corn and wheat demand, we could be stepping on a demand-led market here. By that, I say, when you look at the world wheat stock situation, it's really low in terms of exporters. If we think about where we're going in the future, the Australian drought is going to force a lot of business to the United States. EU is not shipping as much, so we think there's a story in wheat and a story in corn.
And similar to the corn market, we have a tremendous amount of wheat stocks being held inside of China that may not find its way to the world market. And if we get too far down the road, Russia may say, hey, we maybe want to hold back some of these supplies for higher prices in the future. So are we at a major turning point?
We think so. We think we're close. The Russians, in particular, domestically speaking, are looking at record highs prices in wheat for rubles. The government is going to step down on it. We think December, January. So we think we're at that kind of point that you got to be a little careful about being bearish here.
So overall, though, the USDA ending stocks data still leaves us at a very large amount of supply. So it's going to take a tremendous amount of demand. Will that demand come from traditional sources, or could we see it from the fund side of the equation?
Demand will come from funds, but I think the big driver will be exports, David. And so if we think about the stocks report, we should have about 2 billion bushels of corn, maybe 390 million bushels of soybeans, and wheat stocks may be a little larger because we just didn't have the export program kicking in just yet.
Well, I might caution, though, sometimes you get the claim in a marketplace that the trade is not paying attention to the fundamentals. And in this case, even though we may have large stocks, the funds may look out and say there is a need for an inflation hedge, and maybe they're going to come into commodities. So this report's kind of the juxtaposition of deflation and inflation. So what do you do?
Well, we're going to look at buying a corn call, David. The volatility on corn calls is extremely low. So we're looking at buying a 350 corn call, which is almost in the money for just 9 cents. We're going to risk 5 cents with an upside target of 25 cents.
And you have the Chinese indicating they may pare back soybean mix in their feed and use more corn, so that could play right into that particular idea. I have a trade also, Dan. I'm looking to buy the December Chicago wheat 540 call at 14 cents with an objective 31 and risking a total of 6 cents. I'm picking on the weakest market over the last 2.5 years, thinking it might be the biggest candidate for some influx of fund money.
David, we think this Russian story is going to take some legs going forward.
Great. Well, Dan, on Market Movers, we like to educate new folks just tuning in. Today's education topic is commodity fund allocation. What does that mean to you?
Well, it means there's really categories of index funds, and then we also have funds that are managed money, and the two are relatively different. But I think as you look at index funds, there's been a liquidation process that has occurred over the last several years. We're finally starting to see some new money flow into that space. On the other side of it, I think you're having people saying, hey, commodities are relatively cheap with the Dow making new highs. So maybe the spread between the S&P index and commodities in general offers an opportunity for our space.
Exactly. You have trillions in equities, and a little bit of inflation hurts those positions. So the funds are certainly wanting to protect their interest in the marketplace. Well, Dan, thanks for your insight. We'll keep a close eye on the market ahead of the September release. Thanks for joining us on Market Movers. I'm Dave Hightower. Trade well and trade smart.